Hey you guys, welcome to a Money Monday educational video, and today we're going to be talking about imbalance zones. These are essentially zones that get created on fast moving price action, and usually what happens is price tends to retrace to these specific zones. Generally speaking, like today, we created several imbalance zones. We had one imbalance zone that was created from the short morning for Good Friday, and so I want to talk about how you can use those to essentially eliminate one side of the KPL to improve your win rate, improve your odds, and ideally make more money, right? So starting out, we're gonna look at NinjaTrader, and we're gonna look at my indicator that I've been creating, but we'll also, because it is slightly different than what you will see on TradingView, but for those of you that are not in Premium and don't have that indicator, you can use this essentially in the same way, and it works really great. So first thing I'm going to do is show you how to get the indicator on your chart. It's going to be called gaps and imbalances. If I go to settings here, it's called gaps, imbalances, wicks, MTF, and this is who it is by. You can search that if you go into the indicators tab here, type that in, and you will find this specific version. One of the cool things that it does have is you can go in here and you can choose whether you want to be looking at imbalances, gaps, which gaps you're not going to really get in futures because futures trades 23 out of the 24 hours a day. So gaps really don't, gaps don't usually occur on futures. This works great for trading stocks though, and gaps tend to get retraced too often. So there's a lot in this indicator that you can mess around with. And wicks is another really good one. Wicks is an indicator that I've created for NinjaTrader as well. That's, I think, really one of my most favorite ones. But let's not get sidetracked here. One of the other cool things, if you're on imbalances, you can go to the 30-minute, you can choose an hour, you can choose larger imbalances, or you can do it on the same time frame that you're on. We're currently on a 15-minute time frame here, and so I'm just going to leave that. This is what my settings are right now. You can copy these as well. There's my style, there's my visibility. Pause any of that if you need to mess around. We're just going to turn off the Lux Algo smart money concepts, even though some of that stuff is very similar. We're just going to be focusing on the imbalances today. And I'm going to turn off this breakout probability indicator as well. We don't really need any of that. We want to focus on imbalances for today. So one of the things with imbalances, and the reason why I find it to be fairly important, and one of the cool things is that it deals with volume. This indicator will tag the amount of volume that occurs on that specific imbalance. And so this imbalance right here was 84 contracts. What you end up seeing as this candle comes in here, if you scroll up here, you can see that there is volume tied to each particular candle. So whatever candle you hover over, it's going to tell you how much volume each of those candles had. Now this is a 30-minute imbalance that occurred, and so it is going to be bigger than what one candle should be able to fill. Now this candle was again only 3.2 thousand. This one here was 1.3, this is 1.4, this is 1.1, etc., etc., etc. Then you get to 3, and so these candles right here obviously are not they're not filling it. Now those settings that this indicator also has, if we go back in here and go to settings, it is set on half fill. You could change this to full fill, meaning that it will only finish filling until the candle touches the other side. You can also turn this on just touch. So as soon as a candle touches it, it turns it off. And then I have it on half fill. I think that's the best way to have it. Again, that's personal opinion. But what we are trying to do with imbalance zones and how we're going to use them with KPLs, or how we do use them, is we're not just looking at where the bars touch, although this is a good way to use these. It's not necessarily the entire picture, because these zones are created based on volume. And so if there is an imbalance in volume, you kind of want to see at least that same amount of imbalanced volume fill that zone before it's going to make the next move. So Obviously, with all these candles, we're talking this is Globex. There's not a lot of volume that's occurring, but eventually we get to the point where we've likely added up to about 31,000. I'm not going to add all these candles up for you; it would just take too much time, right? But by the time we get to there, then we create a nice little imbalance zone here going south, and we start to make this move down. We're talking about a move from about 41.32 down to lows of 4,100 points. So not a massive move, 30 points down. But what you want to do with these zones, and you figure this zone is now filled, then what you see though is one zone is created, and you go, before we're getting to this KPL, if this is in real time, you go, okay, well, there's one zone created, it's not necessarily the end of the world. We're not sure, we're not 100% sure that, we're going to retrace to this, but then you get a second zone. And so this second zone is created right here. And by this time, once this second zone has been created, we start to go, okay, we have an imbalance of 5,000 contracts. That's not a lot. Now we have an imbalance, though, of 21,000 contracts, basically, right? And we're moving down, and we have not, refilled to that. So at this point, if you are long and you are, down, on your position, this is a time where you can start to go, okay, my risk reward here, I am not going to be likely rewarded for holding a short position to go lower, because we have these imbalances, and these imbalances that occur intraday, especially prior to the market open. And this is all in Pacific time. So if you're thinking about Central, it's going to be 2 hours ahead, right? So the market opens here at 6:30 a.m. Pacific. That is the opening candle. All of these zones have occurred during this session prior to the market open. That is a likely scenario where we will see a retracement to fill at least one and then potentially move down. If not, fill both of those zones. And obviously now we created another imbalance zone right here, which we'll talk about here in a second. But what this does then is you go, okay, we have this larger zone especially, we're likely going to need to come back, and you can filter out needing to take a short at this specific zone. So what you're going to try to do is, if there is days like this where these zones and imbalances are created, you're going to look to ignore one side of the trade, because we need to see some sort of retracement to fill this. And obviously this candle right here is 37,000, almost 38,000 contracts. This is 30,000. This is 31,000. I mean, we're plenty of volume. And granted, that's for the total candle. And as we can see, these entire candles are not inside of the zone. So again, we're approximating. You're not going to know the exact amount of volume each of these candles spent inside this imbalance zone, but what you're going to know is, you're approximating. You're doing this on the fly. You're approximating what the values are, and then you get this candle right here, another 24,000. And this candle closes inside that zone. So all 24,000 contracts were inside of this zone, and it's bullish. So obviously we filled that imbalance that was occurring in this candle as well right here, 23, almost 24,000 again. So this zone has been filled now. This zone has not. Here's the great thing though. Once that zone is filled, you could go long above, short below. You don't know that a small zone like this is for sure going to get filled at this point throughout the day. But what you do know is, now we come down, we haven't exited the KPL, right? The buffer zone. And then we start to make this move up. You go, okay, I'm going to get in, you're going to get in like you normally do, right up at the top of the buffer zone for the long. And then what do we do? You're getting long somewhere right around 41.16. We close out 41.40. We're talking about basically 24 points of profit on the day. And that is a great cover up for not only the short that you potentially took, right? So, whether you completely waited for it to come down here and then you stopped out for your 14 points, or whether you decided to, stop out somewhere in this range, which then ends up making it, let's call that 8, and we entered at 19, that ends up being approximately 11 points that you end up losing. So if you take an 11-point loss first, you don't go short, and then you end up going long, you not only have saved yourself a few points in the stop loss here, you saved yourself the 14-point stop here, and then again, you're holding long above, short below. We're taking a long trade right here, and we're getting that move up. And again, you go, well, Cameron, you had a massive green imbalance zone, 73.5 thousand contracts that were created in this 30-minute imbalance zone. And yes, that is 100% true. But again, you have to go to time of day. What time of day is that happening? 9:30 a.m. Pacific. That's when zombie hour starts to occur. We didn't end up coming back into it. We held and we found resistance, or pardon me, support to coming back into that zone. And again, the move continued up. And so you can use some of these price action concepts in order to filter out one side of the trade one way or the other. If we look at a day like this is March 24th. So as a few weeks ago, you're going to see that we had a zone that was created on this candle. This candle was 68,757 contracts that was traded, but that's from the previous day. We're mainly focusing on imbalance zones that are created during the current session. And again, what time of day is this? This is 3:45 Central Time when a zone was created right here. And this candle right here was 3:15 a.m. Central Time. And so that zone was created right here. Again, it's pre-market, so that helps us out. We're getting down here as we're coming down. You could have already been long, long above, short below, right? You're taking the long off the upper key price level buffer zone. But we get up here, we start to retrace into it, and we get rejected, right? And then we keep coming down, and we get to this point. At this point, as you start to see, what is going on here, we did see some support off of this previous imbalance zone from the previous day, right? You might go, well, maybe we're working up, and it is 4 a.m. You have to also understand what time this is. I'm not gonna, try and say everyone's gonna be up at this time, but this is just a great example, right? This is all occurring pre-market. You would be looking, now that there are two imbalance zones again, for that retracement up to this upside. So if you did, go, let's just say like this, you did go long here, you ended up stopping out, you took the stop, you went short, and now you're short somewhere at about 39.56. You're getting down here to 39.40-ish. We're talking about a 16 point in the green, kind of trade. You would start to look, especially as we get into, we get here towards the market open, 8 a.m. is still pre-market. We get to 8:30. This is the market opening. You're starting to see that we're making higher highs and we're making higher lows, moving in that upward direction. Yeah, we get this wick down, right? But we're holding this area. We know that these imbalance zones are up here. This imbalance zone on this candle was about 14,000. That was 14,000 contracts on that candle. This candle was 11.8 thousand. So decent amounts, right? And then that's where we see, again, that retracement, pull back up, fill this zone, fill that zone, and then we continue to move that same way up. So again, two separate days. We're talking about March 24th, and we're talking about today, which is April 10th. Two different days, two exact setups, patterns, and the same exact market movement. And so that's why I really want you guys to kind of focus on these things, take a look at these things, use these things, because again, volume is really difficult in the moment during the day for me personally to be like, oh yeah, that's bullish momentum or bullish volume, or that's bearish momentum and bearish volume. But really, when all you're talking about doing is using simple addition and subtraction to approximate when we have filled one of these zones versus we just ripped through it and we're likely to just continue down, then it's easy to kind of see where the differences is. The last thing I also want to point out, with these sharp moves down that do create these zones, you're likely to get retracements to these zones. When are you likely to see a trend move happen? You're likely to see a trend move happen when there are no there are no imbalances being created. So if we find a day where we just start trending down, and this is a great example, right? So, I mean, we're up here towards 40.23. We finished the day down here at 39.80. That's a 40 point drop, right? Why would you why would you be less likely to take a long right here versus, maybe waiting for a short or something, and or just not trading this day in general then, or waiting and taking a long here now that we've come down and bounced versus, like the other day? Well, because there's no imbalance zones that have occurred, right? So you're not looking for a retracement as we get to the open of the day. If there's no imbalances being created, there's much more freedom for the market to move without the need for a retracement to fill the volume void that occurs. And so what you get with, a day like that is you'd go, okay, I'm not getting in yet. I'm not gonna take that long, because the trend is your friend at that point. We're likely to see that continue down. But as we touched once, we pushed up. I guess we touched down here. We're seeing long wicks on the bottom. Tried to push up. We went lower. Came down here towards the open. We pushed up. We went lower. But then, we get down into here and we come back up. Now we're starting to make higher lows. Great opportunity for a quick, if you were just going to take like the end of day trade, right? You could get a nice little win right here towards end of day and scalp approximately, let's say it's 34.95 up to 4,005, get a nice little 10-point win. And you used price action, you used volume, you used the absence of imbalance zones or the presence of imbalance zones to then determine whether you were going to take a trade, on a specific side of the KPL. And again, I understand this is not a simple concept. This is not like, just support and resistance, but it's also not a very difficult concept either over time. And it's also a confluence with our very basic, go long above the KPL and go short below the KPL. It's just an added filter. It's an added step that you get to use in order to potentially make your trades more profitable every single day, every single week, when those opportunities are there. I shouldn't say every day, when those opportunities present themselves during the week. So hopefully this video was helpful. I will catch you in the next one. Have a great rest of the week. And if you need anything, let me know. Talk to you guys soon. Bye.